Welcome to the Coin Bureau Weekly News Roundup. My name is Jessica.
And my name is Guy. Here are the top stories in crypto this week.
BTC wobbles again. The top cryptocurrency falls after another failed recovery rally, leading traders to caution that bigger losses could come soon. How low will BTC go?
Ethereum ETF Hopes. Comments made by asset managers and adjustments to their filings suggest a spot Ethereum ETF isn't necessarily dead in the water. Everything you need to know.
AI recovery rally. AI cryptos explode higher in response to an imminent announcement by OpenAI and microchip company earnings. Which AI cryptos have the most potential?
Macro indicators on the slide. Oil prices, interest rates, and the US dollar start to roll over, foreshadowing a massive rally for risk assets. When could the rally occur?
And a closer look at last week's top performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, BTC experienced more downside volatility after it attempted a recovery. It's not clear what caused the sudden dip, but the result was the usual hundreds of millions of dollars of long liquidations. In practical terms, this resulted in hundreds of millions of dollars of automated BTC selling over a short period. Whatever the catalyst was, it must have been crypto-specific because the stock market simultaneously continued to rise. For context, if the catalyst had been macro-related, then stocks would have dipped as well. The absence of this dip tells us that some piece of crypto news spooked crypto investors. Our best guess is that it was related to a hit piece published by mainstream media outlets alleging that certain entities in the crypto industry had been manipulating prices on certain exchanges. Now, not sure who needs to hear it, but price manipulation is common across almost all asset markets, even the largest. Case in point, megabank JP Morgan was fined almost $1 billion for manipulating precious metals markets and treasury markets in September 2020. For reference, the treasury markets are the most liquid in the world, meaning that they should theoretically be immune to manipulation. Apparently not. In any case, another possible explanation for the divergence between stocks and crypto could be because of stock buybacks. As the term suggests, stock buybacks are when companies, buy back their own stocks. Obviously, this causes the prices of these stocks to rise. As it so happens, Apple recently announced the largest stock buyback ever, clocking in at an incredible $110 billion. Of course, investors have already priced in most of this buying, hence why stocks rose last week, even though the buying technically hasn't started yet. Regardless, BTC is once again sitting at the critical level of 60k, at least at the time of shooting. The recent rejection from the Bollinger Band moving average on the daily, seen here, is a bad sign in our book. It suggests that BTC is running out of room to rally, something noted by other traders as well. In our estimation, BTC only has a few days to retest this trend line you see here. If it can get back above it, then it could rally into the low 70Ks. If it gets rejected again, however, it could fall to 55K, which is the Bollinger Band moving average on the weekly. If you throw in liquidations, it could go lower. Now, whether BTC breaks to the upside or the downside seems to depend on the upcoming CPI print this Wednesday. If you're subscribed to our weekly newsletter, you'll already know what we think will happen and how the crypto market will react. So be sure to subscribe using the link in the description. And if you want to maximize your profits by trading what comes next, then take advantage of the 60% trading fee discounts and up to $60,000 sign-up bonuses we have for the biggest and best exchanges over on the Coin Bureau deals page. These deals are only available to our viewers, so take advantage of them before they expire, using, of course, the link in the description. Now, similarly to BTC, ETH is also sitting at a critical level. The difference is that this level is much more dire, the Bollinger Band moving average on the weekly. As you can see, this key indicator has historically shown you when ETH was in a bear phase or in a bull phase. Below is bear, above is bull. Zooming into the daily chart suggests that ETH could break down to 2,400 if it falls any further. On the flip side, it could rally to 3,700 on the back of a bullish catalyst. This begs the question of what the catalyst could be. Well, believe it or not, but the answer seems to be the spot Ethereum ETFs. As we also mentioned in our weekly newsletter, BlackRock and JP Morgan recently made comments which can be summarized as, it doesn't matter if the SEC labels ETH a security, the ETFs can still be approved. For those unaware, it was believed that the security label would scupper the chance of such an approval. This might sound strange, but if you watched our video about whether ETH is a security, you'll know that the SEC consists of different divisions. The division that's been engaging in all these enforcement actions is, well, the Enforcement Division, led by Gurbir Grewal, who is overtly political and has an agenda. By contrast, the rest of the SEC seems to be fairly reasonable when it comes to crypto. This includes the SEC commissioners, the head honchos. Aside from Gary Gensler and Caroline Crenshaw, the rest are pro-crypto or at least neutral. And in Caroline's case, it sounds like her term runs out in early June. Whatever the case, the point is that the part of the SEC that approves ETFs is not the same part that's been cracking down on crypto. This means that the spot Ethereum ETFs could still be approved, and it looks like asset managers have already begun adjusting their applications to prepare for this possibility. The most notable in this regard are ARK Invest and 21 Shares, which removed the staking components from their spot Ethereum ETF filings. If you've been keeping up with our coverage of crypto regulations, you'll know this is significant because the SEC doesn't like anything crypto-related that earns a yield. The removal of the staking component could therefore be evidence that the SEC told ARK Invest and 21 Shares that their applications will be approved if they make this change. Alternatively, though, it could just be a Hail Mary attempt to get the applications passed, something highlighted by Bloomberg's ETF analysts. From our perspective, though, ARK Invest and 21 Shares probably wouldn't have gone out of their way to adjust their spot Ethereum ETF applications if they knew they would be rejected anyways. This change also didn't happen in isolation. Remember the comments from JP Morgan and BlackRock. Now, if the SEC does approve the spot Ethereum ETFs, things could get very interesting. That's because its enforcement division would probably sue Consensus, Uniswap, and other entities it's been targeting in Ethereum's ecosystem, regardless of the approval. Note that it could do this in the next 2 weeks or so. The result could be a sort of pump and dump, with ETH rallying like crazy on the news that the ETFs have been approved, and then crashing because of the SEC's lawsuits. Even if the lawsuits don't happen, ETH could still dip if the inflows into the ETFs are low. Remember what happened with the Ethereum futures ETFs. Make no mistake though, if the spot Ethereum ETFs do get approved, it will open the door to basically every other crypto getting an ETF of its own. In this sense, the ETF approval could be even more bullish for the other large-cap altcoins that institutional investors are interested in, notably, of course, Solana. On a slightly different note, it seems that AI cryptos appear to be waking up again. This is not surprising given that OpenAI recently announced that it would be making an announcement today. Depending on when you see this video, it's possible the announcement has already happened. It's expected at 10 a.m. Pacific time, by the way. OpenAI CEO Sam Altman said that the announcement won't be related to GPT-5 or any search engines, which is a bit funny because it's a convenient way of reminding everyone that more OpenAI catalysts are coming. Besides GPT-5 and search engines, OpenAI will also be releasing its video AI product, Sora. Notably, all of these technologies are expected to be released over the summer. What this means is that there will be no shortage of catalysts that could take AI cryptos higher, in the coming months. The caveat, though, is that this assumes all these technologies will work perfectly. Any issues and the FUD will hit hard. Absent any issues, though, AI cryptos will, in fact, rally hard. Most of their long-term prices appear to be painting cup and handle patterns that are foreshadowing a doubling or more. Naturally, the gains are likely to be led by WorldCoin given its connections to OpenAI, though WLD may not be the biggest gainer. More about WorldCoin in the description. I digress. Now, before I tell you which AI cryptos will see the biggest gains, I need to underscore another series of AI-specific factors to watch out for, and that's AI-related company earnings. As some of you may have heard, TSMC reported continuously strong demand for AI chips in its most recent earnings report. This is a big deal because it means that Nvidia's upcoming earnings are likely to reflect the same strong demand. Whether these earnings are big enough to make investors even more bullish than they already are remains to be seen, and Nvidia's chart suggests that the earnings print could take it in either direction. As you can see, Nvidia appears to be painting a long-term bull flag, which, if it plays out, could take its price to a staggering $1,500. To put things into perspective, this would work out to a 10x return for those who bought the market dip during the October 2022 lows. Kudos to those who did. Now, the caveat in this case is that Nvidia's bull flag could just as easily be a double top pattern, given its current formation. More importantly, recall that Nvidia's earnings aren't the only factor affecting its price. The aforementioned CPI print this Wednesday could push Nvidia's price in either direction. Assuming the CPI comes in cooler than expected and that Nvidia beats earnings expectations, then the cup and handle patterns for all of those AI cryptos will probably play out. Regarding which will see the biggest gains, the honest answer is that most of them look like they'll see similar gains in percentage terms. Even so, the AI cryptos with lower price tags, smaller market caps, and the most availability on exchanges will likely see slightly bigger gains than their peers. It shouldn't take more than a few minutes to do that research, and we'll leave a link to the only resource you need in the description. Now, speaking of rallies, it looks like risk assets could see another big rally of their own. This is because major macro indicators appear to be rolling over. For starters, oil prices appear to have broken down following a rising wedge pattern on the weekly. This is bullish as it suggests inflation pressures will ease. It's also bullish because it suggests we're unlikely to see more geopolitical escalation in the Middle East or elsewhere. As most of you will have noticed, geopolitical escalation was weighing on the markets over the last few months, particularly those for risk assets. It seems these risks have dissipated, or at least been priced in. Next up, we have interest rates, specifically the yield on 10-year US government debt, aka 10-year bonds, aka 10-year treasuries, but we'll just call them bonds for the sake of simplicity. The 10-year yield likewise appears to have broken down following a rising wedge pattern on the weekly. This is more bullish than you might think because the 10-year yield appears to be inversely correlated to risk assets, namely small-cap stocks and altcoins. Although the correlation seems to have broken down in recent weeks, falling yields are bullish across the board and should provide a tailwind for all assets. The same is true for the DXY, which seems to be rolling over on the daily chart but remains in an admittedly strong uptrend. FYI, the DXY is inversely correlated to almost every other asset, which makes sense. When markets crash, people tend to flee into US dollars. When markets rally, well, it's the opposite. This is why the DXY's long-term price charts are so scary. Its more recent weekly price action appears to be painting a double bottom. When you zoom out, that double bottom looks like it could cause a completion of a massive cup and handle that would cause the DXY to explode higher. What's fascinating, though, is that this doesn't mean that the US dollar is getting stronger per se. Rather, it means that the other currencies in the DXY basket are getting weaker, namely the euro, the British pound, and the Japanese yen. There is a scenario wherein all three of these currencies would weaken, and it's not a pretty one. The silver lining, though, is that it's in the interests of the US to keep the dollar under control. That's because a strong dollar is bad for the global financial system, which is in turn bad for the US itself. If we do see the DXY explode higher due to, say, a hotter-than-expected CPI print, then the pain wouldn't last too long. Eventually, the Treasury and the Federal Reserve would intervene to weaken the dollar, and as all of you will probably know, that's done by printing. Now, this printing would be beneficial for all assets, especially those that were designed to combat money printing, such as crypto. It goes without saying that gold would do well too. Note that you can find out whether gold or BTC is better by using the link in the description. And with all that said, it's about time we looked at last week's top performing cryptos. So, Jessica, take it away.
Thank you, Guy. Well, last week's top performing cryptos were Toncoin, Render, Thorchain, Akash Network, and Casper. Starting with Toncoin. Ton appears to have pumped due to the upcoming release of Notcoin's Not token, which will launch this Thursday. We talked about that in our weekly newsletter too. Again, the link is in the description. Ton's chart is somehow looking even more bullish than it did last time, as its recent price action appears to have painted a bull flag that could take its price as high as $9. Just remember that the upcoming CPI print could dampen the rally if it comes in hotter than expected. Next up, we have Render, whose RNDR token appears to have pumped after the project in its ecosystem was featured at Apple's recent event. Like Ton, RNDR appears to be painting a massive bull flag, and zooming out reveals the cup and handle pattern that most AI cryptos are showing, per Guy's earlier comments. If the bull flag plays out, RNDR could go as high as $17, consistent with the cup and handle target. These depend on those AI catalysts. Regarding Thorchain, meanwhile, its Runecoin appears to have pumped due to a gas optimization to its cross-chain DEX, which has made certain BTC and ETH swaps up to 6x and 2x cheaper respectively. In contrast to Ton and RNDR, Rune's chart looks a little bit bizarre, and dare I say it, even bearish. Specifically, it seems to be foreshadowing a head and shoulders pattern in the short term. Zooming out to the longer term trend and looking at it through the lens of market cap reveals an eye-opening trend, or rather, an eye-opening trend line. It suggests that Rune's market cap could rally to around $3 billion, which would translate to a 50% pump, or roughly $9 in fiat terms. As for Akash Network, its AKT coin appears to have pumped in response to a combination of OpenAI's upcoming announcement and Akash Network's own upcoming event in Buenos Aires, Argentina. As you can see, AKT looks extremely bullish on its longer-term price chart, a massive cup and handle pattern. If it plays out, AKT could double or more, and I'll remind you that this all depends on the upcoming AI catalyst that Guy mentioned earlier. Finally, we have Casper, whose Cas coin appears to have pumped on the speculation that the crypto will be listing on Binance soon. Oddly enough, it appears that Cas was already listed on Binance in the past. It seems that it was delisted along with other cryptos in October 2023 for unspecified reasons. This would explain why Cas's price action looks a tad bearish. Like Rune, Cas appears to be in the process of painting a head and shoulders pattern. If it fails to break above the 14-cent range with momentum, then it may very well experience a bearish reversal. And as always, be sure to join the Coin Bureau Insider Telegram channel if you want to find out which cryptos are pumping and also where you can trade them. The link will be down in the description.
And that's all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit the like button, subscribe button, and bell icon too.
Don't forget to check out our deals page where we have massive trading fee discounts and sign-up bonuses of up to $60,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you want to pick up some snazzy crypto merch, the Coin Bureau merch store has you covered.
You can find the link to those resources and many others in the description below.
Thank you so much for watching, and we'll see you all in next week's episode.